the combination of decisive monetary accommodation and fiscal action, combined with the strength of the sectors that are benefiting tremendously from this crisis, is what has driven this situation on the markets. But let's be clear. There is some disconnect between what is happening in the real economy and what is happening in the markets. For this disconnect to be closed down, we ought to move towards recovery in the economy. Very important to sustain support measures so companies and workers can continue to contribute.
The head of the IMF there, Wilfred, when I asked her about whether the markets were telling a different story than the real economy, because the IMF, and she's been really out front warning about some of the inequalities that have been building in the system, the fact that lower earning income workers are being hit especially hard by this. And her message was the markets have teed off the stimulus, both fiscal and monetary, and that there is a disconnect. She also, in the big news of the day, actually gave a preview of next week where the IMF puts out its official growth outlook, said that it's actually not as bad as originally feared, hinted that they were going to rise up their global economic forecast. Why? Well, in part because there's been such heavy stimulus measures to help fight the economic pain that we had as a result of more than 80% being in lockdown as a result of the pandemic. So I'll play for you the entire interview in the next hour, but clearly topical as we are learning now that continued stimulus, which would continue to help the U.S. and the global economy, important to put in a global perspective, is looking farther away.
Yeah, well, definitely looking forward to the rest of the interview. And I do think that international perspective on the scale of stimulus, both monetary and fiscal, that we've seen is important, because we might lament the breakdown of the latest stage of talks in Washington for more fiscal stimulus, but there are a few other developed world economies that have seen as significant monetary stimulus and pretty significant fiscal stimulus, even though that was now a few months ago. And in that sense, we might lament the breakdown of the latest round of talks. But I think the U.S. economy on both the monetary and fiscal side has seen more support than some other developed world economies so far. And that's played out certainly in the stock market, as the IMF chief there was pointing out. But as we stand today, we are sinking down 277 points just off the lows. We were down about 1.3% at the lows, now down 1%.
Shepard Smith here. Thanks for watching CNBC on YouTube.